All right. All right. Hola, guys. ¿Qué paso? What's going on? Thank you for tuning in. This is Hala Pablo. I hope everyone had a wonderful Christmas. Let's skip all the formalities now and get right into Bitcoin because that's why you clicked on this video, right? Well, I want to thank you for clicking on the video. And for those of you that have been following, that are subscribed to this channel, then you should be very happy of what's going on. You should be amazed at just how the price action is playing out. We're going to continue to go off of these two charts because fear and greed doesn't fear and greed don't change. They print the same wave trajectories as they've always done since at least the 1920s when Richard Wyckoff began noticing these patterns. And indeed, we see this almost to a textbook degree of accuracy in Bitcoin from the bull market in 2020, 2021, to the almost mirror image of what is happening in, for this year of 2024, 2025. We see it came out of the pump. In this case, we had the Trump pump, and we've been following it since the Trump pump, which would have been around the PSY area. Now I have these. You see, these are both ending diagonals with the macro Elliott wave configurations here, with the 3, the 4, and the 5 being the UTAD. Here I've merged the Elliott wave theory with Wyckoff, so I have a trading range drawn out at the 3. The 3, of course, being the top of the main drive in the Elliott wave cycle, in the impulse wave. And so we've designated that as the buying climax, as we did in 2020, 2021. And then of course we have a retracement where we test the prior lows, and that's the automatic rally. Comes back up, constitutes the secondary test. Doing so, it creates an inverted head and shoulders, and then it comes back up all the way to retest the highs as it did, and it did the same thing here, and that constituted an up thrust as it went higher than the buying climax. And then again it came back down, this time not as low as the automatic rally or the trend support, and it began to create this upward kind of slanted micro trend support line, if you will. And we see the same thing drawing out in this year. So you could see these are almost cookie cutter identical. And then we had a larger inverted head and shoulders, which culminated in the all-time high of back in 2021, which would have been around $64,000, and that was the UTAD, and then we had the sell-off from there. So we have a 3 drive in both cases: the buying climax, the upthrust, and the upthrust after distribution, which culminated in the macro sell-off, where it broke structure. And we see the same thing here. We have the 3 drive, and then the breaking of structure after it culminated in the 5 wave of $108,000, or whatever the all-time high was. I believe it was 108,000. And then we had the macro sell-off, or the markdown, where it came back down. And this is typical how these things play out. We have the final bull trap, and then the sell-off, the macro sell-off that everyone has been waiting for. In fact, I was waiting for this sell-off a long time ago, and I'm surprised, yet I'm not surprised, because it is Bitcoin, and in the end, Bitcoin does whatever Bitcoin's going to do, just because of the extreme volatility due to supply and demand. In this thing, it's the most sought-after precious commodity on Earth right now, and everyone's vying for it, everyone's gunning for it, and it's just a colossal cat and mouse game, and going up against very, very deep-pocketed informed interests. And so yeah, but the waves you see thankfully, the waves are surprisingly the same. They keep in more or less the same kind of governance within the same kind of governance. And so we could track them with a surprising degree of accuracy, which is what this channel endeavors to do. So if you haven't subscribe, because this kind of technical analysis will keep you safe. I'm not, I don't presuppose to know everything, and I do get things wrong from time to time, but I do have a surprisingly high degree of accuracy in my technical analysis. My charts are anywhere from between 80 and 85%. You could check the accuracies on on TradingView and see for yourself. So if you haven't subscribed, go ahead and subscribe, and then you could track Bitcoin with us and stay safe in the markets. Okay, so here we have this markdown from the all-time high, which occurred back in 2021, and here it is now occurring here on the cusp of 2024, 2025. And it, like we said, it broke structure and it created this. This is actually a zigzag. So a zigzag is a 5, 3, 5 pattern. So we see the 5 wave and then the 3 coming up. Really, what it is a inverted head and shoulders. We've been seeing these things form since all the way back here at the 4 wave, when it came down from the 4 and created the automatic rally. And so we see the mitigation now. Now, what usually happens is when we begin to come into this point of the LPSYs, which is the last points of supply, these are the last kind of rallies. I call them death rallies. We are actually marking down out of structure. This kind of structure here is actually an ascending wedge kind of structure, or theory calls it ending diagonals. Rising wedges are bearish, and so we see the breakthrough down here. And then what happens, the first part of it is, after we get this first LPSY, what happens is the price action comes down and mitigates this lower liquidity void that started at the automatic rally point, which is the 4 wave in the macro Elliott. And so it comes back down, it mitigates. All mitigates means is it comes back and it retests this area here, this low, and it closes out, or it fills, if you would, this liquidity gap, or this liquidity void, which was the prior low. And this year it was $43,157 thereabouts in 2021. And this year it was about $92,000. And so we see already that we've already mitigated this area here. And then what happens is it comes back up. The price comes back up because what it's trying to do is get back into the wedge. It's trying to rally and come back up and remitigate the high, the prior high. So, and you see that's what it tried to do here. And it had several attempts at the micro trend support line trying to get through, but consequently it fails. It fails to enter in because there's just no value now above the LPSY point. There's a lot of fear now. There's a lot of uncertainty, and quite frankly, market makers are taking profit now. Informed interest, the composite operators now have determined to take profit, and what they're trying to do is to get the retail guys who bought up here at this UTAD, bought into the news, thinking Bitcoin is going to go to $200,000 by the new year or whatever, or after the whole Trump hoopla thing, bought the 5 wave, and now they've the market makers have sold into this pump, and now they're beginning to, and that's what this is here, all this sell-off here, this supply spike that we see even identical in the vertical bar volume. We see the action, the volume, the VSA, the volume spread analysis shows the same kind of configuration. We see supply predominance decreasing here, and so this is this is normal during the LPSY period, and so we see the price trying to rally, trying to come back into structure, because if it can get back into this ending diagonal, or this rising wedge, then it could make another attempt at the UTAD. That's definitely what retail wants. That's what the top longers want right now, and so they're hoping for this. And so we see the price trying to break structure and come back in, but unfortunately, the sentence has been passed, and the axe is coming down, and anyone who bought up here is now severely underwater, and they're praying for a New Year's miracle. Now, I don't think it's going to happen. We see multiple attempts here. We've already failed this year. We could look at what happened last time, and I'm going to play these bars out so we could see how everything transpired. But everything looks to be, as you could see, I mean, you just look for yourself. You get someone who doesn't know anything about technical analysis, and they'll look at this and they'll see all the similarities. So so far from this PSY point, everything is played out pretty much almost in cookie cutter fashion. So, and including to where we are right now with these 2 or 3 rejections off the macro trend support line. And now we've come back down with the volume. Again, we have predominance in supply. So what I contend and what normally happens is after this first mitigation at the 4, the markdown continues after a failure to rally, and then the LPSY, we get another LPSY point as it comes back down to have a triple mitigation along this low. And then what happens down here normally is there is another liquidity void that is even lower, and this is a macro liquidity void, and it's usually found right underneath the PSY areas. And you can go back and you can look at prior bull market, bear market cycles, the dual cycles, and you'll see more often than not the price coming back down to re-mitigate even the PSY void. And that's usually where it consolidates. And it'll start reconsolidating, and it finds a bottom usually somewhere around here in these prior lows, and that constitutes about a 50% sell-off, I believe. We can look here if we take it down from the UTAD. See, we've only retraced about 27%. That's really small potatoes, guys. Normally we come down, it's more than a 50. See, this is 54% if we were to come down to the PSY liquidity void area. So if this is going to play out like it looks like it's going to, in which it has so far, then we can expect another 50% or 50% total, which from now we've marked down only, we haven't really marked down that much, 14, almost 15% from the all-time high. So to bring us back down into the PSY liquidity void area for the second low retesting will take us about 22%, which is entirely feasible. Let's see how it played out. Let's see how this played out. Can I play the bar? Is it going to let me play? Select bar. Let's see. Why isn't it letting me play this? Okay. 3 times. Let's do a 1 time and then play. It's not letting me play it. Okay. Go back. Confirmation. Yes. Let's try it from about here. Here we go. Okay, let's see if it'll play it from here. Okay, so it's playing out now. We had another attempt, a third attempt. So expect another pump. We have 3 attempts. We have more supply predominance coming in. Now remember, it's trying to get up through this trend support. Will it make it through? Remember, if it could flip this line here, then we're going back up to retest the UTAD point, which is the previous all-time high. And then if it's able to hold its own there, then it's going to put another leg up and mark up. So now we had another failure. See how it's kind of hugging this macro support line. It's already mitigated the 4, and it finally capitulates, and it comes back down. Yeah. So this is on a fractal. This is basically this whole top on the macro is this on the micro. You see the fractal play out. This is the PSY, and then you have a 3 drive here. Anyway, I think it's fascinating the way everything plays out in price action with the waves. And so we experienced another rejection. We came back down. So expect it. It looks like we're already heading back down to the 4 to remitigate this first liquidity void, and then it goes even lower. And here it's going to It's going to try to hold this line here, but it's already, I mean, the writing's on the wall with this LPSY after this UTAD, and there it just falls. You see how it free falls, but then it finds support. So it goes interstellar in this area because there are no main support lines, and then here we see it mitigates the PSY. We see price doing this over and over and over again. This is not an anomaly. And then usually between the 4 and this is like the 2 on the Elliott. If you count this part as the 1, the first impulse correction, we had a sharp here, and then we had the 3, the big 3, and then we had the leading diagonal. It goes up to the 5. Between the 4 and the 2 is usually where we have the reconsolidation, where it finds a bottom and it reconsolidates, which means it informed interests begin to reaccumulate Bitcoin all over again because they're fixing to put up another leg eventually and have another top, put up another top on the macro, which usually goes even higher than it creates a new all-time high. And so that's what leads me, people ask, is the bull market over? Is this it? And I'm saying, well, I don't think it's it. I think we're going to put up another leg, but I think we have to go down and reconsolidate a little bit. And so all that to say, we need to watch Bitcoin. We're going to see some more attempts in the days coming. We may break this area here and come back up over $100,000. Maybe Bitcoin can come back up to $102,000, $103,000. That's still all within the Fibonacci retracement of a B wave. So I think the B wave, the 618, ends around $103,000. So that keeps it right around in this general area. So you'll see the price coming up into this area. This is still within the B wave. If you call this like on the macro correction, A, and then B comes up here, and then C starts the top all the way down. So this is the C wave, the A, B, C. See it? The B can retrace up to 6.1%, like the golden Fibonacci retracement from all of A. And so we did the calculations in the group. This brings it up to like 104, I think. 103, 104 would be within Elliott wave theory for a B wave retracement, and then we could see the C, in this case, mark all the way back down to this liquidity void for the PSY area, which places it between $85,000 to $86,000, and then a reconsolidation somewhere around here, barring like a black swan event or something that would actually make it dump even further. But so far it's played out almost identical to 2020, 2021, so I don't really see any aberration from that. But you never know, and that's why we keep an eye on it. Nobody knows what it's going to do, and Bitcoin can do anything at all. And with all the uncertainty right now in the world, anything is possible. But I think within like a reasonable expectation, we can expect the same sort of play out to happen here. Reconsolidation between liquidity void 1 and liquidity void 2, which is the PSY area between the 4 and the PSY. Reconsolidation period for maybe a few weeks, and then like another spring going down, terminal shakeout, and then up, as you see how it plays out here. I'm just going to let this play out a little bit so you could see. We've already been 15 minutes into this video. If you've been following this far, then yeah, man, good job. You must be serious about crypto, serious about technical analysis, and I thank you. Subscribe if you haven't subscribed, because we do this stuff all the time. And if you want to take your trading up to another level, consider joining our private Discord through Patreon. I try to keep it extremely affordable, and you get you definitely get your money's worth. It's like $20 a month. And once the alts start flying, I do very, very well with the alts. I mean, we did like 14 alt swings this last, couple weeks ago when the alts were flying, and I was 14 for 14 at about 30 between 28 and 35% gains on each one of them. And with these, man, we're in and out. We're setting limit sells and we're out, bang, at 30%. So that's really where I make my money. I really love alt season. And like I've been swinging them since 2017. So this isn't my first rodeo. So if you'd like to take your trading up a notch and kind of learn what I do, and I teach you everything. There's no secrets. It's just reading a lot of charts. I've spent thousands of hours reading charts, and it's pattern recognition and volume, and how the volume and price action interact with each other. You don't need all kinds of different fancy schmancy indicators and everything. You just need to know, the real traders, the real successful traders, the big traders, just go off of price action volume. They may use like one or two moving averages, but that's only to confirm the bias that they've already noticed off of historical price action and trend. And then you got trend resistance, trend support resistance, and trading range support and resistance. You just need a few lines, and that's it. Volume, price action. And so let's see. You see how it came back down for the spring, for the terminal shakeout down here. We saw all this supply here, yet we weren't able to make a new low. So these two lows are mitigated, but we didn't go lower than the mitigation point. That's usually a sign that it's going to mark back up. And so what are bottoms but the inversion of tops? So this is basically, the spring is the UTAD in reverse. So it's a bear trap. This was a bull trap. This is a bear trap. And then we see the price is consolidating. The spread is getting tighter. See how it's getting tighter here? And so they're just trying to shake out the holders one last time before they increase demand, pump up the volume. The point is that it's not going any lower than the point it made when it had the initial sell-off at the C, at the selling climax at the C. So that would be around 80,000 for us this year. So I would be buying down in the 80s, 85. The price makes it down. Anything like lower than 86 is like really, really fortuitous to begin buying at that point in preparation for the next wave up, which will break structure. It'll break out of this trading range here. You see the trading range. Got the selling climax and then the automatic rallies here, and so this will be the secondary test area. This is the next kind of sign of weakness. But then how the price is coming back up to mitigate the highs of the automatic rally point. See here? Yeah, if this were a redistribution, then it would probably come up about halfway to the 50% Fibonacci point, and then you would see increased volatility in the spread, and that means that the market makers are still selling. There's still a lot of volatility. When you see decreased volatility, it means absorption, especially in the second half of the trading range. But it's not that easy, because then you have because they'll keep bringing it down. But these are fake outs. These are fake dumps, and especially here because you see hardly any supply coming in, and is a triple mitigation now to the lows, down to 28,000. But the supply, how is it the supply is less than here? And it made no new lows, and now it's coming right back up, almost as though the 0.5 Fibonacci line is like the price action is magnetized to it, and then we'll see it come all the way back up to trading range resistance, which is up here with almost like a magnetic draw. See, here you go. You see how it almost magnetized it? It flashed up like a bolt of lightning. This sucker is gonna shoot back up again. So this is the bottom, and now instead of the LPSYs, these events are called LPSs. Yeah, LPSs. So if it hits this LPS and it doesn't retrace from here, then we get the next shoulder coming up. See, it's like retesting the neckline, and then it shoots back up, and we're going to see the same thing happen this year. We should. So especially now, and even more so because of because of all the political interest, not to mention all the institutional interest. And then if we start getting regulations, it's going to embolden more smart money to come in. And then that's when we're going to see the really big players jump in and pump this thing, but not before severe bleed outs. Why? Because they don't want retail. They don't want guys like me or you holding Bitcoin. They don't want to pump this thing like they're going to, and have a whole bunch of people in the rocket ship. Only certain people are allowed in the rocket ship. It's a certain club, and you and I aren't part of that club. And so when the rocket does take off, the bulk majority of the passengers are going to be those of the elite club, the Wall Street guys, the oligarchs. Now, there's going to be some of us, but only those who have held, and only those who have played their cards right, and have tried to mirror what these guys do, what smart money does. And so that's what my technical analysis endeavors to convey, is the actions of smart money. So we buy when they buy, and we dump when they dump. And so that's really the main prerogative of Wyckoff and Elliott Wave. It's tracking the footprint forensically of the market makers and what they do. So we can't beat them, so we join them, right? Our pockets aren't as deep as theirs, and so we can't win that. We can't win that war. If we try to outsmart them, outfox them, we're going to get smashed. So instead, we do what they do, and we kind of mirror their actions. It's kind of like the pilot fish that swim alongside the sharks. You ever see the mako sharks and the great whites, and they have pilot fish that swim right next to them? The shark can't see them because they're swimming in tandem. And then what happens when the shark kills a tuna or a seal or some other kind of food source? Is that the pilot fish go in and they get to eat the chunks too of like what's left over. And so that's kind of like what we do as Wyckofians. That's the mindset behind this. So anyway, I've rambled on long enough. Maybe I've had too much coffee, but that doesn't matter. I'm going to drink more anyways. And I'm going to continue to look at these charts. Subscribe if you get anything out of these videos. Like, subscribe, and let other traders know about them. And yeah, stay tuned. And if anything else comes up noteworthy, I'll let you guys know. I'll shoot you a video. And better yet, if you'd like direct access to me, if you'd like me to look at some of your coins and your portfolio, when I have some time, consider subscribing to the Patreon account. It's $20 a month, and yeah, you basically have me. You have access to me. It's almost like texting me on my phone. When I get around to it, I'll definitely answer your questions, and I'll look at your charts. So anyway, it's up to you, or keep watching these videos and you prosper off these too and stay safe in the markets. All right, that's enough for me. I'm going to go now. Thank you again for tuning in. If we don't see each other, have a wonderful new year, and stay safe in the markets. All right, guys. Adios. Bye-bye.